It happened on a Tuesday morning. No fanfare, no press conference. Just four of the most powerful names in global finance, JPMorgan, Mastercard, Ripple, and Ondo Finance, completing a transaction that the financial world has been building toward for years. What they settled wasn't just a trade, it was a proof of concept for the future of money itself. On May 6, 2026, Ondo Finance announced the completion of what it called, and what the data confirms, a landmark pilot. Together with Kinexys, JPMorgan's blockchain infrastructure platform, Mastercard, and Ripple, Ondo executed the first-ever near-real-time, cross-border, cross-bank redemption of a tokenized U.S. Treasury fund. Here's what actually happened and why it matters. Ripple redeemed a portion of its holdings in OUSG, that's Ondo's tokenized short-term U.S. government treasuries fund, directly on the XRP Ledger, a public blockchain. From there, the fiat payout instruction was routed through Mastercard's multi-token network, known as MTN. That instruction landed at Kinexys, JPMorgan's blockchain settlement layer, which debited Ondo's blockchain deposit account and delivered US dollars to Ripple's bank account in Singapore, across borders, across banking systems, in under 5 seconds. 5 seconds. Compare that to the traditional alternative: wire transfers, manual reconciliation, correspondent banking chains, and settlement windows that typically take 1 to 3 business days, and that only operate during banking hours. This transaction happened outside traditional banking windows. It didn't wait for the New York Fed to open. It didn't wait for Tokyo to wake up. It simply settled. To understand why institutional cash flow is now pointing squarely at Ondo Finance, you need to understand what Ondo actually is and what problem it solves at scale. Ondo is not a crypto speculation play. It is a regulated, institutional-grade tokenization platform that brings real-world financial assets, primarily U.S. Treasuries, onto public blockchains. Its flagship product, OUSG, offers qualified investors exposure to short-term government bonds backed by portfolios managed by BlackRock, Franklin Templeton, Fidelity, WisdomTree, and Wellington Management. As of early 2026, Ondo has accumulated over $2.75 billion in total value locked across its product suite. OUSG alone commands significant market share in tokenized U.S. Treasuries. That is not DeFi speculation, that is institutional capital quietly and systematically moving on-chain. And the trajectory is remarkable. Ondo's TVL was just $40 million in early 2024. It crossed $534 million by year-end. By mid-2025, it surpassed $1.6 billion. It now stands well past $2.75 billion, a growth curve that mirrors not the speculative frenzy of crypto bull markets, but the deliberate, methodical adoption patterns of traditional finance. The SEC closed its 2-year investigation into Ondo in November 2025 without recommending charges. That regulatory clarity was a watershed moment. It removed the single largest uncertainty blocking institutional participation. Add to this Ondo's acquisition of Oasis Pro Markets, an SEC-registered broker-dealer, giving it a regulated gateway for U.S. securities distribution, and a new tokenized fund, Sweep, set to launch in 2026. These are not the moves of a startup hoping for adoption. These are the moves of a platform that has already earned institutional trust. The infrastructure argument. The JPMorgan Mastercard Ripple pilot isn't just a headline, it is an architectural proof point, and it changes the calculus for every institution sitting on the sidelines. Here's the problem that has quietly blocked tokenized asset adoption at scale. Tokenized assets can move fast on a blockchain, but the cash settlement side has always hit a wall. Wire payments, manual checks, banking cutoff times. You gain speed on one leg of the trade and lose it on the other. What this pilot demonstrated is that both legs can now operate as a single, integrated, near real-time flow. Mastercard's multi-token network served as the bridge, translating blockchain execution into instructions that JPMorgan's Kinexys infrastructure could act on, settling in fiat through existing correspondent banking networks. 3 layers of finance, public blockchain, institutional messaging, and traditional banking rails stitched together seamlessly. As Ondo President Ian DeBode put it, by connecting public blockchain infrastructure with interbank settlement rails, we are laying the groundwork for 24/7 global markets that never close. And critically, Ondo confirmed that this same architecture is designed to scale. It can support redemptions from any public blockchain on which OUSG is issued. The XRP Ledger pilot is the beginning of a framework, not the end of a demonstration. Zach Chestnut, Global Head of Commercialization at Kinexys by JPMorgan, noted that broad adoption will require collaboration across geographies, banking systems, and public blockchains. The pilot, he said, proves that multi-party coordination at that level is achievable today, not in theory, not in a white paper, today. So, where does this leave institutional capital allocators? The question for institutions has never really been whether tokenized real-world assets work. The question has been, can I trust the plumbing? Can I move money in and out at scale, across borders, within my regulatory framework, without creating operational risk? The May 6th pilot answers that question with a live transaction between real global financial institutions, not a sandbox environment, not a testnet, not a press release. Today. Consider what has now been demonstrated in sequence. 1. Ondo's OUSG product operates on a public blockchain with BlackRock, Franklin Templeton, and Fidelity as underlying asset managers. That's not crypto risk, that's treasury risk. 2. Redemptions can now clear cross-border in under 5 seconds outside banking hours through JPMorgan's correspondent banking network. That's not experimental, that's operationally live. 3. The regulatory overhang is gone. The SEC has cleared Ondo. The company holds an SEC-registered broker-dealer. It is inside the system, not outside it. 4. The institutional endorsement is explicit. JPMorgan built the infrastructure. Mastercard provided the interoperability layer. These are not speculative partners. They are the backbone of global payments, endorsing a platform. For treasurers managing corporate cash, for asset managers seeking yield without duration risk, for sovereign wealth funds exploring digital asset mandates, and for global banks looking to reduce settlement friction, the value proposition is now concrete, live, and de-risked in ways that simply did not exist 12 months ago. Ondo's Ondo Global Markets arm is already expanding into tokenized U.S. equities and ETFs, capturing approximately 45% of the tokenized equities market share within its first month of launch. The platform is no longer just a treasury product, it is becoming a regulated on-chain capital markets infrastructure. The history of financial infrastructure is littered with technologies that worked in theory for years before one decisive moment made them real. Fedwire, Swift, electronic equity trading, each had its proof of concept moment, the transaction where the skeptics ran out of objections. For tokenized real-world assets, May 6, 2026 may well be that moment.
Ondo Finance didn't just complete a pilot, it became the settlement layer in a live transaction between JPMorgan, Mastercard, and Ripple, three institutions that collectively underpin trillions of dollars in daily global flows. The infrastructure case is made, the regulatory case is made, the institutional endorsement is made. The question now isn't whether institutional cash flow will move towards tokenized real-world assets. The question is how much and how fast.